download the slides. Just if you slides.
What does it mean, live stream?
So it's I just posting it on our YouTube channel as well. All right, just a second. I'm going to open the slides. Okay, guys, can you see the slides? Okay, perfect. I'm just trying to look at all the kind of windows which are open. All right, so tonight we're going to speak about the company which everyone knows. It used to be called Facebook. Now they renamed the company and now it's called Meta Platforms because they believe that they expanded business outside of Facebook, just Facebook. All right, so and it was the time to change the name for the company as well. Okay, so let's start from the plan. So the idea basically today is always, so we're going to go through the general market overview first. After that, we're going to look at industry, internet industry. We already looked at one company a couple of months ago, but today we're going to probably once again to look at this industry, at least briefly. And after that, we're going to mostly look at Meta Platforms and see if this company kind of doesn't have any potential or vice versa. It has a potential for us as investors and we can make money if we put in money in it. Again, guys, remember that it is educational webcast and you have to make your own decision. You have to decide if you like it or not like. You have to do research of this company yourself, and also you have to take into consideration your personal circumstances. Okay, please tick in our chat plus that you understand that. All right, so let's have a look at the indexes. For the last few months we can see a correction, like it was called before correction. Remember that when the market falls less than 20%, it's called the correction. Now, if it falls more than 20%, it's officially bearish market. Now, and especially check that, and we can see that if we check it from the highest point where Dow Jones was until the lowest point on Friday, it's going to be 19.7%. So just below 20. But if we go for Standard & Poor's, it's already 24.5% drop. And if we go to NASDAQ, it's 34.4% drop. So I would say we're officially in bearish market, even though Dow Jones is still below that, but other two indexes, they are kind of below the price. Also, the thing which I want to point out, look, for example, if we see those roles, that's one role, second role, and third role. So our current role is not, it didn't go as high to the top of the trend line. You see, it's lower that it's probably went half of it only, and when it's went down, it's actually broke. So, and if we compare it to the Standard & Poor's, So it's very similar situation, one roll, two roll, third roll, and on the fourth roll, we can see it's much smaller and it's broke through. So if we connect two tops and put another trend, so we can see that we're forming a trend which is kind of falling faster, okay? And in case of Dow Jones, we actually now reached the point which was the highest point before the crash, pandemic crash. All right, so it was February 2020, before like the lockdown started. So we can see that was the highest point of the index at that particular moment. After that, we had a huge fall, and then like a very fast recovery. Now, at the moment, we're just at that particular point. Now, it is probably quite important level because, first of all, this highest point at one thing. Secondly, we can see that when we already kind of recovered, we couple times bounced from that. We tested this level several times. After that, we bounced, but already from the top. It was as a support for this index, and only after that we moved all the way up. Okay, that was the move, and at the moment we just at this moment. So indicators, as you can see, it's in overbought, in oversold, sorry, situation, and kind of it tells us that it might have a probability of going up right now. So how high it's going to go, it depends on a lot of factors, and there are a lot of factors which can influence the continuation of the fall. The inflation, the interest rate, the conflict in Eastern Europe, like Europe. So there are a lot of issues which can trigger the continuation of the fall, so increase the fear in the market. But at the same time, we have to understand that despite all these issues which exist at the moment on a global scale, there are some companies which actually like stable and can survive that, and not only survive, but actually can grow during that period. So, and that's why it's very important that you have to analyze the company individually before you put in money, because a lot of people, they believe, oh, I'm going to put money now in the index and it's going to jump up and I'm going to make money. But you have to understand that if the issues which currently exist in the market, they continue, the market can fall even like lower. All right, so be aware of that. And in this case, you have to wait. Yes, index in the long term always grows, and it could be a safe investment. But at the same time, you have to understand that there is nothing can stop it from falling even lower. All right, so this is the thing. Now, if we look at Standard & Poor also practically reached the level where a couple times it's kind of bounced. It didn't fall as low as the highest point before the pandemic crash, but still there is a level here. Not strong level, but still we're here. All right, so pay attention to that. Indicators also in oversold situation. So most likely we have higher probability of turning around and at least doing another roll. Okay. Now, if we go for Nasdaq actually fall 34%, and also we're at the bottom of the trend which we have right now. So there is no any levels here. Actually, there is a level small here a couple times, but it's not a pretty strong level. So I wouldn't be surprised if we break through and go lower. Now, it didn't speed it up. So, but if we, I'm not sure if I can draw it here. Just a second. Where is the drawing? Interesting. It's completely disappeared. My screen is so big, I cannot see where the drawing tools. All right, but if we, for example, connect this highest point and that highest point and draw the line here, so we might expect that it's if it breaks through of this trend line, which we have, it might go even low. So be aware of that. But at the same time, there are a lot of companies which included in this index. They already dropped like more than other companies in two previous indexes. So the question is, are they going to fall lower or not? Or they're going to at least pull back now? This is a Compaq. Another interesting thing is about VIX. Look at VIX. Usually VIX goes in opposite direction from other indexes, and if other indexes like Dow Jones or Standard & Poor, they go up, this index goes down. If those indexes go down, this index goes up. But look for this interesting thing. So previous indexes, they're doing lower and lower levels, but this index actually, look at it, that was the highest point in January. And after that, the highest points are actually going lower. So despite the market keep falling, this index is actually not moving up as high as it kind of supposed to do. Look at the jump which happened after the pandemic crash. It was huge, right? The fear on the market was unbearable. Whereas now, it seems like, yes, the prices are falling, but fear on the market not as high, and the volatility is not as high as previously. Okay, so on that one. So it's a very interesting thing. So, and that's one of the indicators which tells me that it's quite probable that the market turns around now and within a few days, and we can see at least a pullback up, which can give you certain opportunities for trading. All right, so this is the indexes. Let's have a look also at P ratios. This is a technical analysis which we looked at. It's very important to look at fundamental analysis as well. Dow Jones last year, P ratio was 28, now it's 17. So it's a huge drop, right, in P ratio. It means that this time, people paying only 17 times of the earnings in index, whereas last year they were happy to pay 28 times of their earnings. So it's dropped a lot. Similar story in Nasdaq and Standard & Poor, although those two indexes are higher. So Standard & Poor P ratio 20 and Nasdaq is 23. Now, if we look in the historical P ratio, it's in average always between 15 and 20, somewhere in those numbers. So we can say that Dow Jones definitely in the middle of that range, whereas Standard & Poor just at the top of that range, and Nasdaq is still out of that range. Now, also we have to take into consideration that IT companies and Nasdaq usually includes companies from that sector. They have higher potential to grow, and of course, people are paying more money for the faster growing companies than other two indexes. So that's why it wouldn't be surprising. And also you can see that the drop was pretty high from 36 PE to 23 right now. So compared to the last year, this index is undervalued now. But if you look at the historical, so it's a bit higher than average. All right, so take it into consideration as well. So if it goes another, let's say, same P ratio as Dow Jones, okay, 17. So it has to drop what? Around 40% maybe. No, 20, 10, 20, yeah, nearly 40% drop. Okay, so be aware of that. Now, this is about the general overview. So basically why we're looking at the indexes in generally, because you have to understand if you're planning to open the position, you have to take into consideration what's happening in the market. You have to understand what's happening in the industry itself and also on the market in general, because even if you find a good company, a fantastic company with good potential, and it seems like it's at support technically based on that particular company analysis, but the whole market is falling, so most likely it's going to drag your company as well down. So you have to take in consideration analysis of a specific company, but also analysis of the whole market on that particular moment. All right, so let's have a look at the internet industry. So we already analyzed it, so I'm going to be brief here. So it is a very, very kind of diverse industry, and there are a lot of companies which actually covering like businesses or service in different industries. So at the moment, it's not very easy to put one company in specific industry, because very often that the company can provide different type of let's say products or services. Like for example, Microsoft, they provide software, but at the same time they producing mobile phones, right? So so how would you evaluate which industry you're going to put it in, right? So some companies, they would say provide telecommunication services, and at the same time they in entertainment industry because they are producing movies or providing services to watch movies. So there are different companies, so you have to be aware of that. And that's why when you analyze that, you don't invest just in a company because it's in this industry and you think, oh, internet is going to grow, so I have to put money in that. So always analyze the company specifically. And there are a lot of areas there. So social media, Facebook, specifically it's social media, and after that you can see search like Google, for example, different portals, ecosystems, e-commerce, location-based services, media services, etc. So now it is a very dynamic changing industry, and there are a lot of companies which actually can appear in one industry from another industry, because if the company has a lot of like I would say management and operational capabilities. So what they can do, they can identify that this direction is quite profitable. It can add competitive advantage to their company, so they can develop new direction. And like for example, again, Microsoft, they used to be a software company, and after that they started adding hardware, right? They started manufacturing their own tablets, their own computers, their own mobile phones as well. All right, so this is how it's going to work. Now, a company providing services in different area might quickly become a competitor by moving into the new field. Now, another important part here, that legal and government control becoming more intense year after year. And actually one of the concerns about Facebook, it's a legal thing, right? So, and we're going to talk about a bit more, but you probably noticed that governments, not only American government, it's Australian government, like every European country government, Asian governments. So they are kind of trying to control the data about their, citizens. And they understand that a lot of IT companies, they can collect data from another country very easily by providing certain services. And let's say Australian citizen can subscribe to certain American services, and after that, the data about this particular Australian citizen is going to be somewhere there in the United States. How they're going to use it? In different situations, they can use it in different way, right? For example, what is happening right now between Russia and Ukraine, and the conflict between Europe and Russia. So you can see that the information is provided in a different way from different sources. So if you look at the European sources, the same type of event, they can show it one way, whereas if you look at the same event which is shown from the Russian side, it could be interpreted in different way. So, and it depends who sees it, they can perceive this information in one or another way. So, and it's very, very kind of scary for different governments, because they understand that if other country has access to their citizens, they can influence their minds in a certain way, right? So, for example, a lot of people were saying that Donald Trump won election because he was better with social media than Hillary Clinton, and that in social media, before the voting day, the Hillary Clinton got a lot of bad kind of publicity, which wasn't true, but that's what they were saying, and it's affected the result of the election. Of course, governments, they don't want that public can be influenced by different corporations or by different governments. Okay, so that's why personally I believe that in the future we will see more and more restrictions about how we can access information in different countries, and how those countries can access our personal data as well. All right, so this is what we have to take into consideration. And Facebook at the moment, they keep the information about us somewhere in American servers, and I'm not sure how long the, would say, Australian government will allow to do that. Okay, something like that. Another thing which is also have to be taken into consideration, that economical crisis might affect performance of different companies in this industry in different ways. So, for example, if people cannot go to work or cannot do anything, like remember last pandemic crisis, so a lot of companies which provided, let's say, media services, they actually increased their revenue. And the main reason for that was that people were sitting at home and watching movies, searching social media sites, and etc., right? So by doing that, they increased the revenue of those companies, right? And they prosper. Whereas other businesses, probably in the same industry, they could suffer. Okay, something like that. So that's why every time when we analyze the industry, you don't have to jump and put the money, for example, in some kind of ETF, which are related to that particular industry. All right. If we go to value line, we will see that it's assigned rank 4 to this industry. So it means that it's one of the best. There are 100 industries in value line, and 4 is one of the best. Okay, so they believe that within the next 12 months, this industry is going to perform much better than the rest of industries in their universe. And as you can see, also Amazon is probably the biggest player in this industry. Google is the second biggest, and then Meta Platforms and Alibaba. Okay, so these are companies like that. When I've done a kind of small screening process in value line, so I just put a few parameters. One of them is the internet industry, 165 companies there. And look, after I put that EPS growth rate, so the company has to increase their earnings per share 10% or more every year within the last 5 years, instantly left only 17 companies. So imagine out of 165 companies, only 17 passed test. So it tells us that other companies, they didn't grow at all, maybe otherwise they were losing market, or they were kind of somewhere below the 10% growth rate. After I put 10% growth on sales as well, so only 12 companies left. And when I put P ratio between 5 and 20, 20 is quite high in any way. So there are only 3 companies left. And one of them is Alibaba. It's a news company, so it's ADRs. And then we can see Flower.com. Never kind of seen this company before, so it's first time on my radar. Maybe I'm going to research it. And then Meta Platform. So only 3 companies. All right, and you can see that Meta Platform right now, it's P ratio 13, and like all 3 companies, like around this range below 15. So I actually could put a parameter of 15 here, P ratio, and still 3 companies will be here. Google, as you can see, it's not in this parameter. Last time I put a bit high P ratio, that's why Google was here, but at the moment Google is not on the list. All right, so let's have a look at Meta Platform. So as you can see that Facebook appeared, it seems like Facebook was forever. To be honest, when I spoke to somebody recently and they say, oh, Facebook was only 2004, I thought, oh my goodness, that's true. Before 2004, it was dark age. You couldn't communicate with anyone. It was one social media in Russia, I remember, and we used it. And we couldn't speak because there wasn't Skype, there wasn't WhatsApp. Now the world has changed, completely changed. Now it's so easy to access people from around the globe, where it used to be very, very difficult. I don't know, guys, if you remember that time, but I remember in order to call to my family from Ireland, I had to pay £1, British, like Irish pound, for 1 minute of conversation. It was extremely expensive. It's extremely. Now we can call for free with Face Live. It's just unbelievable. The technology changed a lot, and now it's keep changing. Okay, and we're going to speak about it. What is going to happen with Facebook when they actually like develop fully their new product. As you can see, there are. If you go to their website, I think it's called Meta Platforms or meta.com, something like that. So if you see you will see this kind of line of their development, but actually they have much more items here than just they put major events here, but in reality, practically every year, if you go there and you scroll the mouse, using this black dot, you will see every year some significant events happen with Facebook, and you will see how Facebook was developing at that time. All right, there are some important portals, and one of the probably kind of major for us. Okay, here Facebook. This is Messenger, Instagram, Purchase, and WhatsApp, right? So those three platforms which are probably most important here. And after that, they added this new platform which now develops all this 3D kind of not software, hardware, right? And also they introduced working platform which allows people to collaborate with each other, and different other platforms that at the moment we can see they develop in metaverse. By the way, guys, can you put I don't know, minus if you don't know what metaverse means, and like if you know something about it, put pluses, because I actually was pretty I heard about it before, yeah, metaverse, and never paid attention until I heard that somebody started paying real dollars in order to buy land in metaverse. I thought, what? Person pays real money in order to buy virtual land in the virtual world, right? And a few days ago, I heard that somebody was buying clothes using real money in the metaverse for the person which was in the metaverse. And for me, it was just unbelievable. So, and kind of when people play games, they spend money for stronger character and for certain attributes of this player within the game. So I presume same happening right now in metaverse. Specifically what I did a small research today, and probably, guys, I even give you the if I find now the link, if you want. The link to the list of different metaverses. Just a second, guys. If I have it here, maybe I close that window. Okay, I found it. So just have a look how many metaverses are. So Facebook is not the only company which are developing metaverse. There are quite few other companies which develop, like Microsoft, for example. They're developing their own metaverses as well. But there are few companies which kind of public companies, and they develop themselves on there nobody owns it, and as a base for this development is some of them using blockchain, but you can see that's how many of them now. And of course, they're going to compete between each other in the future for each person. And there are some kind of reports that people will spend more during their day in the metaverse than in real world. So you're going to put all these glasses like here, and you're going to collaborate with your colleagues, with your at your work, with your friends, with your families, and everything. So when I was researching this kind of just for this presentation, I was surprised where Facebook is going to go, because at the moment they're saying the only thing you can do is just to, let's say, chat through Messenger, right, and see each other. So whereas they are planning to do it's like an experience, so it's like 3D. And for that, you have to buy certain equipment. And Mark Zuckerberg, just at the last meeting, he said that if we wanted to make money, we could sell this equipment for higher price right now for premium prices. But they actually decided to do so. They put the price for this equipment very affordable. So I think you can buy it, like, let's say, those type of glasses for $500 and some other equipment for $100+ dollars. So it's not that expensive at all, and it provides experience. At the moment, it's very limited. And what Mark Zuckerberg said, that we cannot expect the profitability from this sector within the next decade, so until 2030. They're not planning to make a lot of profit from that and sales and revenue, but they're putting a lot of effort in developing this industry because they believe that this is the future of social networking later, and not only social networking. So they're going to collaborate a lot of things. Still, they have major profit which they receive is from advertisement on the Facebook. And at the moment, at least what Mark Zuckerberg said, they're planning to introduce paid service like send messages. You probably know that a lot of like mobile companies, what they do, you can receive the message, promo message from other companies. So, and those companies, they pay for that. All right. So Facebook is going to introduce similar service where they're going to charge companies for direct messaging. So they can send to certain auditor using probably Messenger or WhatsApp or whatever. So, and it will be promo information, which companies have to pay, and Meta platform is going to profit of it. So they have a lot of capabilities to generate cash, and we're going to see how they're going to implement it in the future. Now, this is the general overview of the product. As you can see, the majority of offices are located in United States, Canada, South Africa, Europe. One place probably it's in Africa, right? India, here Asia is part of Asia. We can see no offices in China and no offices in Russia, right? Actually, Russia banned Facebook on the Russian territory because they didn't like that company provided a certain influential messages like propaganda from Eastern Europe, from Western Europe to Russian citizens. So they banned Facebook on the, like Russian territory. But that is like, to be honest, all my friends, they're still using it, and they're using Instagram, and they're using WhatsApp. So in some cases you have to use VPN services in order to do that, but majority of people still use it. Okay, this is kind of the story. So Facebook still has like even regional areas to grow. We can see if they somehow can move to Russia back and to China. So it will create a huge growth like potential for them. All right, let's go to their financials. Now, today I'm going to show you both Guru Focus and Value Line in order for you to just see the difference between them, how they're presented. The information is very similar. Maybe it's presented in a bit different way, but still pretty good in both cases. I even started like more Guru Focus than Value Line. All right, so we can see that there is a description of what the company is, and then we can see P ratio. Now in Guru Focus in current, we can see it's P ratio 12, where average in industry is 17, and historical medium it's 34. So we can see that's undervalued compared to the historical medium and also to the current industry medium. So forward P is 13. So it seems like based on that, there is a kind of they're planning a small drop in their earnings, a tiny one. Okay, so price to book ratio and price to sell ratio, it's actually higher than industry in general, but much lower than in the past. All right, so Schiller P is 28 and industry medium is 29. Okay, PEG is 0.46, which is pretty good. All right, now let's probably focus on that one a bit later. Let's have a look at next page, revenue, right? So the revenue, so sales per company in general. So we can see that it started in 2012, like this one is traded in the stock market, 5 billion revenue. And remember that Facebook for a long period of time, it didn't sell any advertisement. So it was developing just using investors' money. And after that, it started growing. You can see it from 5 billion to 7.8 billion. It's more than 50% within 1 year, and then again 50. And then, so it's growing with a fast rate, right? And we can see that in 2021, it's also grew in sales. And for the last trailing 12 months, so it's already taken into consideration last 5 months at least. Okay, we can see they had a report in April, so I presume it's 3 months. So we can see that it still keep going, okay, in sales. Now let's have a look at net income, okay, and we can see that it's from $53 million, okay. Look at this. It's 1.5 billion, 2.9 billion. So the rate of growth here was fantastic. In 2021, from 2020 to 21, it grew $10 billion. So it's huge, it's 30% growth, right? And now for the last trailing months, it's kind of dragged down a bit. So we can see a couple $1 billion lower of net income. Now, actually, it's attributed to the huge drop which happened with Facebook and price. When I analyzed specifically the annual report and I looked for the reason of that particular drop, so the main reason for that particular increase in in expenses, because can you imagine the revenue is still higher, right? So why the heck is earnings going down, right? So we increased the sales by 2 billion. For whatever reason, we had a loss of 2 billion. And if you read reports, you will see that actually they sold their assets with a loss. Some of their assets, there's kind of areas they sold it with a loss, and as a result, that's affected it. Okay, so in a big thing. Now, there are some issues contributed to that. I just wouldn't tell you specifically, but this is one of the case. And also the reduced operational margin. So if you can see that the operational margin before was 39%, now it's 36%. Another thing which also contributes to the fall in price was that iPhone, like Apple and Google, they changed certain security policies, and at the moment the mobile users, they have to allow to provide the data to platforms like Facebook in order for them to receive a targeted ads. Now it's like a double-sided sword, right? Because I mean, if you don't provide this data, so they're still going to advertise you. Okay, the only ads are not going to be tailored to your wants and needs. And to be honest, I'm not sure completely would I want, for example, to receive ads for something, I don't know, bras, maybe, I don't know, some kind of cats, which I'm not interested in, instead of something specific targeted to my needs ads. So at the moment, kind of, I'm not sure would people allow to see targeted ads or will close it, and what happens in this case. Apple and Android wouldn't show you ads at all. In this case, I personally believe that a lot of people cancel ads completely because a lot of people are irritated for that. But in this case, like a lot of platform, like a lot of businesses wouldn't be able to reach those customers. So I don't think it's going to happen completely to discontinue ads, but somehow they're going to find those arrangements. Okay, this is the way what happens, and a lot of analysts, they believe that it's going to affect Facebook's revenue in a big way, and that's why the price for metaverse shares collapsed. Okay, collapsed in general. All right, that's what we can see. Now let's have a look. So return on equity, okay, 28%, 31 last year. So it's amazing. I mean, it's just unbelievable. If you put in $100,000, so the company is going to turn it into the like 28% more, so 28,000 each year. So it's just unbelievably good. So based on the size of the company, which half a trillion capitalization, so it just the rate of profitability is just amazing. Okay, so let's have a look at maybe value line just for some other things. So we can see dividends completely zero, so they don't pay any dividends. Value line believes, if we look at projections, value line believes that the company, like the share price, is going to be between 167 to 350 within the next 18 months period. Okay. And the current price, if I correctly remember, it's 157. So we actually below. Okay, just make sure that I'm correct. 157. Uh, 163, right? So we just a tiny bit below this level. So we're actually below the target price. So value line believes in the short term, we're going to grow. But if we look at the 5-year projection, so it's actually between 555 and 750. So despite all the challenges company has, despite all the issues, despite all the bad publicity around this particular company, Value Line, an analytical company which exists for more than 100 years, they actually predict that the company price, the share price, is going to grow in the short term and in the long term as well. All right, so this is kind of a good sign for us. And remember that those guys who analyze the companies within that company, within Value Line, they keep track for the same particular company for a long period of time. And if you go to, let's say, Seeking Alpha, you might find the article there, which is pretty fantastic and good, but the person who writes that article maybe analyze metaverse only once and put his own opinion based on what he discovered during that particular time. Whereas analysts in Value Line, they keep a track, they have a certain list of companies, and as long as they're working in the company, in the Value Line, they keep producing same reports about same businesses. So their view on the business is very valuable. You don't have to take everything what they say and invest as they say, but at the same time, you have to definitely hear what they're saying and take it into consideration. All right, another actually interesting thing about Facebook, I just want to tell you, is I was surprised when I was listening their last report, because report started from very emotional things, like when they did mentally challenged a guy, like boy, okay, he was using this metaverse things and how good it was for him and everything. And then when they started meeting, it started from similar type of messages. It wasn't like dry presentation or motivational presentation like some companies do. And then for the first half of the event, of the like annual meeting, I would say it was personal attack, like it was attack on Mark Zuckerberg. Like a lot of speakers were talking about that Mark Zuckerberg doesn't do this, doesn't do that, that he is not managing that part of the business, he is not keeping his word, and a lot of things. And after that, and I thought, why they're attacking their CEO? And the reason is very simple. They want to control, right? And at the moment, Mark Zuckerberg, when he structured his company, he made it in a way that he has voting rights. So he still can change any direction in the company. He can do whatever he likes within the business. And of course, other shareholders, they hate it. They don't like it, especially big ones. All right. So they want a part of this control to have it back. And so that's why they kind of practically begged other investors to do votes in order to change certain policies and certain points in probably in this constitution in order to get this access to those rights. Okay, so very interesting. Why I'm saying about this particular topic? I'm saying you because can you imagine when there is a fight? It's like a politician fight. When politicians fight between each other, at this moment, they focus on the fight, not on doing good things around themselves. So can you imagine if all these directors at the moment, at least during this election process, right? So they're focused how to get more control. So, and they're trying to kind of play these political games, and maybe it will affect their performance. Okay, and to be honest, for the last few months, every news which I read about Facebook, it wasn't that positive. If it was positive, it was like tiny, small, and it's not that motivational. Whereas if I read something bad about it, it's especially big and huge and And now, when I was listening to this annual report, and not annual report conference, I realized that probably it's actually steering around, especially in order to put certain pressure on Mark Zuckerberg. In order, you cannot manage it to do it. You look what people are saying about you, that a lot of criminal activities going through Facebook, a lot of trafficking, they were saying, a lot of abuse, sex abuse happens through the Facebook, and you are not managing to control it. So give control to the board of directors, more control to the board of directors, that they can oversee it and influence that. So I presume this political tension actually can affect the performance of the company as well. All right. So how Mark Zuckerberg is going to manage with that, not sure, but at least it's something what we have to take into account as well. All right. What also I wanted to have a look here, it's long-term debt. Look at this, it's zero. Yeah, and the capitalization of the company, $500 billion, so which is amazing, right? Now let's have a look how much cash they have at the moment. So 2021, end of last year, they had $47 billion in cash. Okay, so their surplus was current assets $66 billion and current liabilities 21. So $45 billion in surplus, which is amazing, which is fantastic, right? For the company, they can buy anything they want. From projection rate, from the growth rate, let's have a look. We can see that the previous rate growth was 37% in sales and 40% in earnings, which is just amazing. And at the moment, they still predict like 17% growth in sales on average and 16% in earnings. So which is also very good for the size of the company. It's just fantastic. Right? So that's what they don't plan to pay any dividends, although they are buying back dividends. And at the moment, they have authorization for another, I think, $28 billion to buy dividends, or not dividends, to buy back shares. Okay, so quite huge. So nearly 5% of the shares, if they take current valuation of the company, they're going to buy. So of course, it's going to boost the price also. So that's what we have to take into consideration. Now, another thing which I want to show you is the PE ratio. I already showed it before, but look, previously PE ratio in the early years of the company was 59, 60, like it was huge. At one stage, it was even more than 100. Right, PE ratio, because the company was growing at a very, very fast pace. Now, then it slowly started to kind of fade down, and but for the last 5 years, we can see it was above 20 in any way. So 25, 22, 21, 23, 23, right? So at the moment it's 12, like 13 based on here the price was at 186. So at the moment is around 12, right? So we just looked at growth focus. So what can you say? The company is making more money, right? So if we take, let's say 2018, 2019, 20 even, right, where the price was somewhere between 160, right? So it was at that area. So the company was making $10. Now it's making 30, 40% more, but the price is exactly the same, right? Or even lower than it was there. So it was, look at the highest prices, right? 218 to 8, 304, 384. And at the moment, the price is 163. Okay. So at the moment, people are scared and they're paying less for Facebook. But we have to understand whatever issues I mentioned, they already happened. And the price already reflects those issues. So a lot of people saying, oh, the company is not growing as fast as it before. Yes, it doesn't, but the price already reflects it. Okay, a lot of political issues. Yes, there are, but the price already reflects it. It's not something new which is going to happen in the future. The question is it going to affect the performance of the company and the profitability of the company? Based on prediction of value line, prediction of guru focus, prediction like any projections of the company itself, the company is going to grow, continue regardless of that. All right, and if it happens, eventually after certain reports, the price is going to adjust and the price is going to grow. All right, so the question is, guys, are we going to use it or not? Okay, so this is the thing which we have to ask ourselves. And again, return on share equity, we can see it's fantastic. It's great. Okay, this is fundamental. By the way, guys, I always ask you if you saw this report. So what do you think? The company is a quality company? Is it undervalued company or not right now? So what's your opinion? Put in the chat, please, if it is quality or not quality, undervalued or not undervalued. Okay. Here marks 4x4. Undervalued, okay, that's interesting. Right, correct. Okay, everyone is correct. So it is 4x4 company. So the quality is 47. Now, the only two places where it lost, first safety, because the safety rank is calculated and there is certain parameter there, the price change. And you could see that for the last 5 minutes, the price going down. So it's not definitely a safe kind of thing. So that's why value line put a safety as a 3. And management, it's actually I reduced personally. And if I didn't listen the annual conference, I would probably put 8 here. But when I heard it, and I heard that all these guys, they kind of attacking the kind of leadership of Mark Zuckerberg, I felt it's not a good thing. Okay, and even though the company is still growing and everything, but I personally believe it's not a fantastic thing. So that's why I took it away that management is fantastic. So that's why it lost a couple points. Still profitable company, still expanding, everything is good, but I didn't like that the company is behaving in this way. Now, from the price analysis, it's got 48 points, and we lost in a couple places. First, and actually in one only place, is sales versus earnings. Because in the future projection, the company says that they're going to grow 17% in sales in only 16%, so 1% lower, right? But still fantastic, right? But earnings are growing slower than sales. Personally, I believe that we can put some kind of reason for that is that they're going to spend a lot of money for development of metaverse. Right, so and the revenue from that part of the business is not going to grow in the next few years, but definitely it will require a lot of cash, a lot of expenses put in that. So that's why company has to take it from other sources like advertisement revenue. So and that's probably will be happening for quite a few years. But when the metaverse kind of start generating some cash, so probably we will turn it around. So if you're a long-term investor, so I personally believe there is a future here, definitely. Now let's have a look at calculation of the price. So if you see the price, highest price, right, we add them together, divide by 5, we get the average high, so $260. We do exactly the same with lowest prices. So for the last 5 years, we add them together, divide by 5, we get the loss average. Okay, and then we do exactly the same with earnings per share. We get the average. So now we have 3 averages: average high price, average low price, and average earnings. So we just calculate the P ratio for highest price and P ratio for the lowest price. Why we are doing that? For the simple thing, right? Because if we believe that like historically, within last 5 years, people paid, I would say 28 times for $1 of profit in Facebook in the past. So most likely, if the same type of circumstances happen in the future, they're going to pay exactly the same money. So usually it happens when everything is rosy, nice, good, good publicity about the company. So that's when people pay money, a lot of money, right, for that. And if it happens, okay, $28, and I presume when it's happening, it means the company is actually achieving what they promised, and they promised to get $26 in profit for the next 3 to 5 years. So it means that we multiply 28 by 26, and we can expect that price might go to $730. Value line tells us about 770, I think, even higher than that. Now, if we go for the kind of conservative thing, so first of all, we're taking actual earnings, not promised earnings, but what actually company is earning. So it's $13.77. Already this year they're planning to get $14 something, right? But $13.70, what happened actual last year. And then we take the lowest P ratio. Lowest P ratio when people are not happy, something is disturbing about company, bad publicity around it. So that's why they're paying only 16 times. So not 28 times for each dollar of profit, but with 16 times. All right. And in this particular case, 16 multiplied by 13, we get 223. So that's supposed to be lower price. And then we divide it by 3 and get ranges. So we kind of believe that 30% of the time, like 1/3 of the time, it's going to be closer to the highest point, 1/3 of the time at the lowest, and 1/3 is somewhere in the middle. So that's why we got those ranges, right? So, and of course, in the first range we buy, in the second we hold, and then we sell, roughly like that. But interesting enough that now the price is 163. So it's much, much, much lower than lowest prediction, because the company at the moment, P ratio is 12, much lower than expected 16. So it's already undervalued based even on that. Okay. So earnings are going to happen 27th of July. So we have another month to go and experience all the volatility of the company with expectation of something there, right? So we don't know what's going, because at the moment there are a lot of things happening. So for example, in the last few months, like at least since not February specific, maybe even March at least, the Facebook was banned from Russia, and they lost that market as advertising market. So the question is, I'm not sure because I didn't see those numbers, but I presume it's they lost quite a lot of like revenue in any way. So yes, they still generate revenue from the whole other globe, but still part of their business was attributed to that area, and now they cannot advertise there. So the question is how much this lost. All right. So, and it's going to be shown during next quarterly report. So, and if it was a big part of their business, so it might affect a lot. If it is a small part of the business, we actually can disregard it completely. Okay, this is what can happen during that particular time. All right, so this is the price. So the company is priced fundamentally fantastic. Now, if we go and look at the estimates, we can see that actually, see, value line Facebook, 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of 9 times, 1, 2, 3, and 4 times they were in a range of earnings expectations, right? And 1, 2, 3, 4, 5 times they were above expectation range. Okay, so whatever they were giving. So the company usually gets it right or overperform. So the question is, what is going to happen here, right? Because if they again do better than expected, it might turn around the direction of the trend, and the company might begin their recovery. Okay, price recovery. All right, because fundamentally it's not a big issue there at all. All right, this is fundamentally, guys. Put pluses if you understand, and if you have any questions, place it here, and let's look technically. Now, technically, this is how the chart looks like. Actually, who remembers IPO, Facebook IPO? At that time, I remember when they were launched, during the first days reached, I think $90 price, and after that it started collapsing, and it's eventually, I think it went to $18, something like that. Now, I personally believe it was already adjusted price. Did Facebook had a split probably before? That's why it doesn't look like 90 here. It looks like more 60. I think they had some split before, and that's why the price is already adjusted. But look at that nice growth. Few times Facebook dropped, And usually it happened because of some kind of regulatory issues with the data leaks. Okay, look, all this, and now huge drop, right? If we go for, actually it's dropped to the level which was in 2018, 19, and 20, right? So which is huge because the earnings increased nearly 40%, like nearly from whatever years, looking at from the 10th, it's already 40% growth. Now that's how it happened. So 384 roughly at that price was the highest point, and now we dropped. Okay, so this is the point where we were. It's somewhere June 2019, right? So same price right now. Okay, this drop was attributed to the like drop in loss. Remember, I told you that the amount of subscribers which are watching daily reduced first time in the history. So, and that's why a lot of analysts say, oh my goodness, they're losing market. They're not losing market. The growth rate slowed down, but not going down at all completely. It's not growing as fast as before. All right, so, but still we have this huge drop, okay, in earnings. And at the moment, the trend is still down. We can see rolls, okay, and at the moment we at the bottom of the third roll, let's say. Okay, that's what we can see. Indicators we can see in oversold situation. And let's have a look. It's actually, look at this 58% drop from the highest point. So Facebook lost 58% of its price, but the revenue is still growing. And okay, the profitability, we can see that in a year ahead it might drop down, but tiny drop, not huge drop, right? And but still the price collapsed like half of it. That's what we can see in the short term. Okay, we can see that indicators nearly turning. Stochastic start going up but didn't cross the line yet. We can see the green candle, the volume is a bit higher, not that much higher, but higher. Okay, we can see that stochastic is turning around as well here, and MACD as well turning around. So like indicators are showing us the turn, but remember again, we have to pay attention to the market in general. Market actually very similar trend. We can see that it's also at the bottom of the support of the trend. So if the market bounce back, Facebook definitely, because Facebook the biggest part, a huge part of the index as well. So, and we can see that it's kind of pushback. Now, where can we expect it? Personally, or maybe I have to ask you. Okay, guys, I'll express my opinion after you express your opinion. Let's do this way. So, can you please, again, if you like Facebook, okay, only if you like Facebook. If you don't like Facebook, you say I am against all the social media. I never invest in this company. So where would you buy it, or would you wait and see? If you would wait, how long are you going to wait? At what point are you going to base your decision fundamentally, or you're going to base it technically? So what is going to change fundamentally in order for you to purchase? If you buy technically, so what is going to happen technically in order for you to purchase? If you do buy it at certain, what price you buy, what price you sell. Okay, now we're not talking about options. We are going to about entry point for stocks, and then already we'll decide later if we do something with options or we do something just purely with stock. Okay, guys, can you share it? Okay, so Max, I might add more meta at 160 to hold long term. Okay, it seems like you already have it, yeah. Okay, anyone else? Okay, Olga would buy more. Dory, Jean, 116. All right, okay, so it's practically a current price. Okay, fill the gap. Okay, yeah, it would be nice, 100% profit, right? Okay. Okay, personally, let's have a look what usually happens. So if we see this line 179, 180, right? So it's it's going to be a certain resistance. It always happens like that. So if you see a couple times it's bounced from that level, so you will notice that. So when we start growing, it's quite possible we slow down here. So 160 to 180, it's one area. So it's $20. It's 13% profit. Okay. So if it, because it's very, very weak level, it easily can break it through, right? In this case, we're going to go somewhere close to these levels. So it's around $200. Okay, so if it goes there, so it's already nearly 26-25% profit, right? So if you go all the way to the top of the trend, it's around 215, something like that, maybe 20. So it's another 13%. So it's already 36. Even if it stays in the downtrend, you still can make pretty good money on Facebook by buying and selling. All right. And if it goes, as Dory says, to close the gap, okay, it's not going to go in straight line. It's still going to go wavy, right? So, but it's going to give you 100%. But let's have a look. If based on what we just done, like fundamental analysis of the price, it can go to this 560 or even $7 something $100. So it can give you up to 400% profit more. Of course, it will take time, maybe 2-3 years, maybe faster, right? Value line tells us 3 to 5 years. But still 400% profit, it's just amazing for the company. Now, if we do rolls, as I already explained, if you buy at 60, 120, it's 25% profit. Guys, if you're doing short-term trade, put stop losses. Okay, if you don't want to hold it for long term, and if you want to get a quick profit, because the volatility on the market is huge, you can make sometimes during one day 2-3% just on the stock move. Okay, and if you do it a few times a day, I just spoke a couple of days ago to my friend from Russia, and he says that he's making, his account is not that big, all right, and he's making $100 a day. He said he's trading mostly options and on index, but he says volatility is so great that he, when the market opens, he's the direction, he buys call or buy puts on SPY and waits and then close and makes $100. He is not putting big money, believe me, very small amount of money, but $100 a day for Russia, it's very good money. Okay, that's what happens. Now, and let's have a look at the option chain, what we can do. At the moment, price 163. So let's have a look, for example, $162 put strike, or 162 strike for puts. For 24th until 24th of June, which is a few days away, today is what, 22nd, first, right? So we can get $3.8 right now. If we bargain, maybe more. Okay, so $3, it's what? More than 2%. Okay, in 1 week, less than one week. So if you, for example, put the price, that your target price to buy at 160, and at the moment 163, you can wait until it drops to 160, which might not happen, right? And or you can sell a put for 162, for example, right? And if you buy at 162, but you got 380, actually your purchase price would be 159. So it's even lower than current price by $4 nearly. Okay, so this is the way to go. Or you can, if you definitely want to buy it, you can sell at 165, get $5. And if you buy it then at 165, if the price doesn't go higher than 165, your average price would be exactly 160. A majority of you told that you would buy at 160. So this is one of the ways to do. Okay. Now, if you do for sell put for 1 week later, so it actually gives you $5.8 instantly. So it's nearly what? Not 4 exactly percent, but probably 3.5%. So pretty good premium, right? For 2 weeks. It's until next Friday, 1st of July. Okay, so also not bad. So if you do would say even if you take 160 strike price and get $5 or 4.8, so your break-even price would be 155.20. Okay, so it's even lower than the current price. So if you're conservative, you can try to do something like that. Now, if we go for 1 month, right, 160, you can get $8.40, which is what, nearly 4.5%, right? And your break-even price in this case would be 152. So it's kind of secure. If you go for 165, you get $10.80. So your break-even price would be 154.20, right? So much lower than you put it in your price. Okay. So this is the power of puts. If you just want to buy shares and sell call, you can do exactly the same. Okay. But remember, very important, that the share price is very expensive. I mean, expensive for some accounts. And if you sell one put, okay, and then you put the shares, you have to have, let's say, $116,000 in this case. So because you buy 100 shares. If you don't want to put $16,000 in trade, so do something smaller, just buy shares. Okay, let's have a look. If you, maybe we can buy calls, right? So what's happening here? Now I took two kind of dates. One is January 2023, and another is June 2023. So this is 7 months from now, and another one 12 months from now. So, of course, probably you're not going to buy at the money because it's the highest premium, like time premium at this time. So you buy in the money or at money. But let's have a look just for pure calculation, how much is time value there. So 160, at the moment, the buying price 855, so minus $3, whatever, 70 there. So it's $25 in the time premium for 7 months. Okay, guys, is it expensive or cheap? How do you think? And if we go for 160 next year, so it's $32, 20%. So in here, roughly 15%, more than 15%, and here is 20. So guys, what do you think we should do in this particular case? Sell options or buy options based on the valuation of this option premium? What do you think? What's your opinion? Or buy shares? Come on, guys, put something. Remember that this masterclass is not just to give you some kind of do this or do that, and that you start thinking about it. What would you prefer to do? Do you think the the volatility is high right now? Okay, small accounts definitely buy shares because it's you can buy puts because one put here is what 35 multiplied by 100, $3,500. Right? So, for example, for 1 year. Now, the question is, will you buy it? Because if the volatility fades away, the option premium can drop, and it's possible to lose all the money which you put here. Whereas if you buy stock, even if it drops down below, and it can happen, right? So the company is good and it will recover. Whereas the option premium can evaporate and you lose everything right there. So that's why if you want a safe investment, you definitely just invest in stocks. Okay, in this particular case. All right, but if you take in consideration sell puts or buy puts, in this particular case, I would probably sell puts because I get the premium 2% a week. Okay, and if I'm wrong, I can roll it over. Okay, I can roll it over week after week after week after week. Okay, so one of the options. If I buy call, I have to pay 20% premium, so instantly. And if the volatility fades away, so I can lose 50% of that instantly, just even if the share price stays the same. Okay, it can happen. All right, guys, this is it about this particular company. So if you have any questions, please ask. If you want to have a look at any other particular company, let me know. And we'll do that. if all good, just let me know, and I wish you good luck on the stock market. Make a lot of money. Okay, but be careful. It is a very volatile market. A lot of people make a lot of money during this time. I remember last time when the pandemic crash was happening, a lot of people were paralyzed and didn't do anything. And even when it's recovered, they still were paralyzed. So choose the companies which you know going to survive this crash. And nobody can know when the bottom is going to happen. But if you believe that is a bottom, like for example, if you at certain stage you believe it, but you're afraid, just put small fraction of the money, just part of it, okay, 20% of available cash. And if it drops more, then you can add more. But if it starts recovering, at least you're making money from the very, very bottom. Okay, don't be afraid. All right, guys, enjoy your week, enjoy your cold weather in Sydney. Or I'm freezing in my house. So hopefully you're warm and nice in your place. All right, guys, and see you another time. Bye-bye.